WallStreetBets is known for the absolute stupidity and ridiculousness of its users, boasting a whole list of absurd plays in which fortunes were both made and lost. There are classic examples that without a doubt sit in the WallStreetBets Hall of Fame, for example, or the GameStop saga in which WallStreetBets users declared war for a first round on Robinhood. Well, recently it seems there is another contender which could turn into an all-time classic, with WallStreetBets user Jshbone12 sharing a series of interesting posts on WallStreetBets over the last month. In the wake of recent banking crises in which Silicon Valley Bank failed among others, Jshbone12 decided that First Republic was next up for a bank run, loading up on 1 week puts at the end of April, in which he almost immediately lost $60,000 due to bad timing. Naturally, fellow Reddit users lapped this one up, sharing their delight at seeing the OP losing so much money so quickly and so stupidly. On the same day, our hero, Jshbone12, decided to triple down, buying more puts at a higher strike price, which either expired within a week or 2 weeks. Here we can see the initial damage of a huge 40% loss, or in absolute terms, our hero lost nearly $55,000. Fellow Reddit user SavageMaster5000 responded that our hero stupidly took the bait on the incredibly high implied volatility of the option, stating that Jshbone12 was doomed to lose out to the option sellers once again. The next comment is some excellent foreshadowing in which freehouse_throwaway warned our hero that this shit may well get delisted, leaving the OP with worthless puts that can't be exercised, even warning our hero that this would leave his money with Robinhood to manage unwinding his puts if First Republic was left trading over the counter. Now, let's move on to the next post. Our hero updates us. The implied volatility on those initial 1 week until expiry puts killed his position, leading to a huge $60,000 loss, which Jshbone12 took on as he sold the puts 30 minutes before First Republic took a huge dip. SavageMaster5000 appears to have been correct that implied volatility would get him in this case. Regardless, our hero was unfazed, rolling everything into a YOLO on a new $6.50 put position expiring in 10 days. Let's now take a look at the reaction from WallStreetBets. Fellow Reddit user Slamped noted that our hero bought puts 30 minutes before the day's lows and sold 30 minutes before First Republic tanked. You really can't make this up. Another Reddit user, odd_explanation3246, warned our hero once again, let's say if you are right, what makes you think brokerages are going to let you cash out your profits? Look at what happened to Silicon Valley Bank and Signature Bank put holders. If the stock gets halted before the bank goes under, your puts are screwed regardless. Jshbone12 quickly responded that Robinhood allowed put holders to cash out. Now the next post, admittedly, this one is pretty interesting and certainly something I missed at the time. The Australian Financial Review stated that executives at 5 of the largest banks dismissed the notion that they would once again band together to prop up First Republic as they had done previously, stating that they'd prefer, if necessary, that FDIC would seize First Republic as they had done with Silicon Valley Bank. An interesting find that certainly would have lowered confidence further in diligent customers of First Republic Bank. Then it happened. First Republic finally crashed and our hero was jacked up, holding loads of puts as we saw previously. Jshbone12 shared another post, boasting gains of $75,000 or 75% on his positions. However, Jshbone12 was not done yet, preaching that these puts should be held until they are worthless, unsatisfied with a huge $75,000 gain. Fellow WallStreetBets users pleaded with our hero to cash out and avoid a huge headache with brokers if trading was halted or delisted. But Jshbone12 simply wasn't having it, not wanting to cash out for $75,000 in gains, but instead wanting to wait for a headache and potentially losing over $200,000. Moving on, it's too funny not to mention. Looking through our hero's Reddit posts, we can see that Jshbone12 was having a little trouble getting his next screenshots onto WallStreetBets. Jshbone12 posted to r/help twice, desperately asking for help in doing the impossible. adding images to a text post on Reddit Mobile. I have no idea how this guy got approved to trade options. Anyway, naturally, our hero's next post is that they would be suing Robinhood for $295,000 if they do not allow him to exercise his First Republic puts after trading was suspended. Jshbone12 posted numerous screenshots in which he pleaded with Robinhood support to allow him to exercise his puts. Despite being in contact with lawyers and exclaiming that his screenshots are legally bulletproof, fellow WallStreetBets users beg to differ, letting our hero know that his screenshots do not in fact explicitly state that he will be able to exercise his puts. However, u/Psychic Apple does well in reminding us that they are not screenshots but in fact exhibits, which of course will make all the legal difference. Now, here's a rarity for WallStreetBets. Remember some of the comments on the previous posts, which pretty much told our hero exactly what was going to happen. u/Nilfi now responded to Jshbone12's post, stating that about 1,000 regards told our hero to exit his position in the other thread, being one of the only times that WallStreetBets was actually right, but our OP has still managed to f*** it up. Now the next post, Jshbone12 updates us stating that many other brokers such as IBKR and Fidelity have allowed put holders to cash out even if they don't have shares, so long as they have enough cash as collateral. However, believe it or not, for Jshbone12 who uses Robinhood, he has not been able to cash out due to Robinhood's policy against short selling. Our hero stated that he falsely assumed Robinhood had its users' best interests at heart and apologised deeply to all his fellow users for defending such a corrupt, vile and dishonourable company. The OP now conveniently states that this issue is bigger than his dumb degenerate gambling arse. This is injustice. Robinhood, a billion-dollar company, treats its users like worthless pond scum. It's here that our hero makes a pledge to donate $10,000 to Autism Society of America if he ever manages to cash out, at the threat of ban from WallStreetBets. Fellow user NoBrilliant9659 welcomed our hero Jshbone12 into WallStreetBets lore, a saga which will go down in history just like... Miraculously, Jshbone12's next post shows an email which shows that First Republic has begun trading over the counter under the ticker symbol FRCB, which should allow him to exit his put positions. Jshbone12 actually made the $200,000 extra just for a little headache, or in real terms, not knowing if you've lost your life savings for a few days. Excellent risk management. This is then followed by another post where Jshbone12 shits all over his past apologies and commitments, stating he will never options trade again and flaunting his 3-day $100,000 gains when factoring in his initial $60,000 loss. Jshbone12 showed that Robinhood had previously bent their policies after sufficient social media backlash, and this worked in favour after he asked fellow WallStreetBets users to spam Robinhood on Twitter and stating that he would donate $10,000 to autism charities. Regardless, after this, Jshbone12 shared some even more stupidity, stating that he lost and gained $50,000 in a day after playing other regional bank stocks caught in the volatility. However, most importantly, there is no mention of a donation to the Autism Society of America in this post. Our hero seems to have played the subreddit, getting to exit his position and not donating. Jshbone12 is now perhaps not a hero but a villain, and is forever banned on the subreddit by the mods, as he never proved his donation. What a wild ride. Now that is the end of round 2, WallStreetBets vs Robinhood, the Jshbone12 saga.